So what I talk about, did I send? I should have sent you some links to the other podcasts, but it's
Yeah,
basically
you sent me a list of questions, so
okay. You get lots of questions, but
yeah.
the people I typically interview are people that are like real estate is their main thing, and so I know real estate's not your
Mhm.
main thing, but um, just so I'm aware, what did you want to talk about? You have oh yeah, what are your let's say what is your biggest real estate deal, and then maybe what is your real estate deal that you're most proud of? Like, yeah, what's the most profitable one, and then what's the one you're most proud of?
Yeah, so, I haven't done a ton of real estate deals, mostly just, purchasing, homes that I plan to live in and then flip in a couple of years. That's sort of my dabble, so to speak. But I would say, yeah, it's a viable thing you can do, especially if you have access to like an FHA or a VA loan or something like that.
Hmm.
It's good for people who plan on moving around a lot. For you to be able to buy a home, maybe fix it up a little bit and then flip it. So I would say, as far as my biggest deal would actually be my first home. Um, it was a bank-owned foreclosure that was on the market for drastically under market value, and the seller's disclosure was listing lots of issues. And I was actually one of the realtors I went to view the property with didn't recommend it, and I went
Hmm.
in with another one, and I kind of took a look myself at what was on the disclosure versus what was actually in the property. I have some construction experience in the past, so I knew what to look for. A lot of it was just cosmetic stuff or very easy fixes, some linoleum in the bathroom, sealing up some fixing small plumbing issues, sealing up some stuff with caulking. Water heater needed a new heating element. The weather stripping on the garage doors and the garage door gear needed replacement. All of these things, I bought the home. All of these things I did myself, with the help of a friend, and it cost me maybe $3,500 to purchase all this stuff and do the fixes myself. And then I ended up selling the home when my family and I moved a couple years later, and I ended up bagging a little over 50 grand in profit. I spent $3,500 to make almost 50K.
Wow.
So that was over, and I only sat on it for 2 years. So it's not like I sat on the house for, however long. I basically made 25K a year off the house at that point. So that really got my attention, because that was the first home I'd ever owned. And I kind of looked at it like, well, I know I'm going to be moving. Why don't I just kind of make it worth it?
Hmm.
Um, I would say the deal I'm most proud of is the one that I didn't do, that I got myself out of, which was when I was in the process of buying my first home. I viewed another property that I ended up making an offer. Um, the I decided that I was going to do an additional inspection and pay for an additional inspection, specifically for the chimneys for the fireplaces, because there's two fireplaces in the home, and I had done my own visual inspection outside, and I saw some cracks, and I said, you know what, I'll pay the 500 bucks. That's what it costs for the inspection out of pocket, just to make sure that these are good, because I knew for a fact that, if you Google it and you look up the market value, or maybe not market value, but the cost of replacing chimneys or fixing chimneys or bringing them up to code, putting liners in them and everything, it's very expensive. It can be $10,000 to $20,000 per, depending on where you are, right?
Okay. Wow.
They ended up finding issues with both chimneys, and that gave me ammo to get out of the purchase. I would have basically bought the home if I didn't do that inspection. I would have ended up buying the home and then already been in the tank almost 20 grand for
Uh,
fixing problems in house. That's no bueno. So
and you saved yourself just by doing an extra inspection. Can you go over that again? So usually when you buy, you're in the escrow period, you have an inspection. Was like
mhm.
the inspection was the inspector like not sure of what was wrong? Like, why did you need to do a second inspection?
Yeah, so the original inspector, he was kind of like a general contractor,
Oh, okay.
and
And
he did the regular stuff. Now, when it comes to chimneys and thermal insulating and stuff like that, you typically want to get somebody who's in the industry, which is a little bit more specialized,
mhm,
to come and inspect stuff like that. And my realtor happened to have a contact, so I went through her contact and did that. But even if I didn't have her, I would have found somebody myself, and done it, because I felt that it was worth doing the extra inspection. And if I'm out 500 bucks, I'm out 500 bucks, right?
okay.
Um, that just means that I didn't risk potentially spending however many thousands of dollars. Um, so, and that's an important thing. I think that especially in this housing environment right now, market in most places, people, from what I'm hearing, are skipping inspections. They're foregoing a lot of things they would usually do to make sure that you're not getting into a really nasty money pit. I heard a story from someone just the other day. They skipped an inspection on a house in Hawaii, and when they got into the house, there was mold in the walls. So
Wow.
yeah, so that's nasty. So yeah, even if it's like, oh man, if I skip this inspection or I cut these corners, I might be able to be the first one to bid on the house or throw down some cash or whatever, and I can get this property. It's probably not a good idea. Just it's only 500 bucks, 1,000 bucks, 1,500, whatever, right? That can save you so much money if you just bite the bullet. And if you realistically, if you can't fork over $500 to do a good inspection, you should rethink, um, whether you're gonna buy a house. You may not be in the position to buy a house in the first place.
Mhm.
So,
I had a client fall through for closing funds, and he had enough for the inspection, but, he, just like high income, credit score is okay, but, he just, like, didn't have any cash in the bank. He's a VA borrower, so he's just like, "Oh, cool, no money down." I'm like, "That's, like, not really no money down." He's like, "That's it's fine." And so, I was like, "What do you have to close?" And the bid we got was 6 grand, 6 grand, to close, and he's like, "I don't have 6 grand," which is fine because you basically get, like, option A, B, and C for closing, where you have either a high closing cost and a low interest rate
mhm,
or a vice versa scenario or somewhere in the middle, A, B, and C.
right.
And so the bank or the lender had given us it's sad because the person who owns this bank is a good friend of mine, and I wanted to like wanted to use his services, right?
Yeah.
So he's obviously like pretty competent, but his team like totally dropped the ball. So when they were doing their underwriting, I guess they missed something,
Mhm,
and like a week before closing, they said, "Hey, I know we told you that we were going to give you like the high interest rate and the low payment, but we tried to sell this loan to Fannie or Freddie or whoever the private investor was. They
mm,
packaged the loan to sell it off, and they wouldn't take it. We need to give you the high interest rate and high closing costs." And he's like, "I'm just trying to close, so that's cool, but I don't have 6 grand. I told you I don't have 6 grand."
yeah.
And so that's just like a long story of there's a long story afterwards of like how we saved the deal. We used a different lender.
Yeah.
Um, but yeah, I always want to know like what I don't want to get into my client's business. Very
Mhm,
unlike what you do, which is personal
yeah.
finance. But it's like, hey, are you ready to buy a house? Yes. Okay. This is what you need to buy a house. Like, are you sure you're ready to buy a house? It's like, do you have
Right.
this much money in the bank? Like, these are the expectations of closing. Do you think you can match those?
Right.
Um,
Yeah.
s-
Versus my end of it is, so I have a lot of people come to me and say, "Hey, I really want to save up and I want to buy a house, right? Or
mm,
we want to buy a house if it's a family or whatever." And a lot of times, I'd say probably 3 out of 4 times, I look at what they have and I'm like, "You're not ready to buy a house." Um, and I'm just straight up with them. Like,
mm,
I don't want to be mean or make them distraught or anything, but um, there's the upfront cost, of course,
mm,
and then there's the recurring cost of what goes on. And one thing I kind of put forth to my clients is, yes, it sounds good to, hey, this, have, hey, this property is mine. Typically mortgage payments are lower than rent payments most of the time, generally. If you were to just outright have a mortgage, or just go out and get a rental from somewhere. But they don't take into account a lot of um, rental payments have utilities factored in.
Mm,
The property owner pays for maintenance. There's a lot of things, a lot of costs that you have as a homeowner, um, that you would otherwise have covered by the property management company or the landlord or whoever, right? And it may be more beneficial for you to rent, save some money, get in a good financial situation, and then find that correct buy. Um, and that kind of goes into investing too. There's a lot of people come to me who said, I really want to invest, and I have to say, you're not ready to invest because your debt to income ratio is kind of nuts. We need to lower your debt a little bit, or a lot of bit, uh, in order to get you in a comfortable position. Um, get some savings built up so that if the main income earner loses their income, you'd be able to take care of your families for a period of time. Most Americans don't even have $1,000 in their checking account, which is really disheartening, because that means that most Americans, if they were to lose their jobs today, which many are employed right now, they're going to be completely beholden to any sort of government benefits to provide for them. Otherwise, they can't pay their rent, they can't pay
mm,
for food, they're going to have to get rid of their car. There's a lot of things that happen. So those are the
mm.
type of clients I typically deal with, is getting people back to a situation where they don't have to be in that kind of that nasty spot, and that they can eventually buy a home, or they can think about investing or real estate investing, things like that.
Okay. Your company, and that's Grawson Financial, correct?
Right. Yeah.
So your company helps prepare people from a position of not being able to invest and invest. Let's say that they're definitely in the position to invest. Let's say a life event happens. They get married or they come into some money. Do you take care of clients at that stage as well?
Sure, yeah. So the three main things I focus on is budget and expense streamlining, debt management plans, and retirement planning. So I make full-on plans for all three of those main services. Of course, I can walk outside of those, but those are my main three things that I'm finding that I'm providing to clients that are in demand at the moment.
Hmm.
And I talk to each one of my clients and go through their specific situation, because there may be something else that I would write up for them or make a plan for them, that they would find value in, that is not necessarily within the scope of my defined services. That's kind of the benefit of being a one-man operation,
Hmm.
is I can be very, very flexible when it comes to my clients. I don't have like a rigid doctrine that the financial planners that work for me have to follow, and we provide service XYZ and only service XYZ. I can be flexible and provide to my client what it is they actually need.
Okay.
Yeah.
I'm sure. I'm sure that encompasses answering, I guess, questions that might be simple to you or me or our listeners, but obviously they're talking to you for a reason. So, could you tell us the difference between two similar concepts that most people seem to misunderstand?
Yeah, I think hmm,
So the example I have is real estate investing and speculating. So real estate investing, I believe, is buying for cash flow. It's like your mortgage payment is this, your debt service or whatever is this amount, and then the amount that you're receiving in rental income is
mm,
much higher. You want to make that spread as big as possible,
yeah,
and if there's a plan to increase that spread, then great. But what I notice a lot of my clients come up to me. Looking to do is speculate. Okay, I want to buy a house. Okay, great. Like, what are your goals? Well, I want it to appreciate. I'm like, well, you can't really plan for appreciation. Yes, historically that's what happens, but if you're buying and you're losing money on it every month because you moved away,
right.
and your mortgage, your VA down or VA loan 0 down, so your mortgage payment's a little bit higher than usual, then, that's just speculating, and it works out for a lot of people. That's why people continue to do it. But that's where my management expertise comes in, or my my little circle of advice is just in real estate. Like, hey, like if this is what you want to do with real estate, this is how you do it. This is how you don't do it. So,
Yeah. So would you want me to give an example specific to real estate or just in general, like financial concepts?
something you're most comfortable with. Real estate is good. Obviously, it's a real estate podcast, but
Yeah.
you're a financial planner, so yeah, go for it.
Right. Yeah. So I think that this might or really does relate to real estate a lot. So one of the misconceptions I think that um, maybe not a misconception, but something that people don't really think about or interpret enough is opportunity cost when it
Mm,
comes to just about anything, right? So time is like basically the one of the only constants that you can really say this is the thing I can't change is how much time I have for either my asset to appreciate, my investments to grow, this, that, and the other. And that also has to deal with debt, right? Whether it's personal debt or investment, something, an investment property that you have that you owe debt on, have a debt balance on. Um, the longer you hold, like say personal debt and don't pay it off, that's opportunity cost that you could be using that payment like say you pay it off tomorrow instead of 5 years from now, you have 5 years of payments that you would normally be sending to this loan at interest that you can then send to an investment or buy a piece of property that you pay for monthly and you let appreciate, or you rent out and you create cash flow. I think that opportunity cost is something that people should really think about and take and put in the forefront of their mind is how can I most effectively use my time? So when it comes to personal investments, the opportunity cost is the highest for young people right when you get out of high school. Or
mhm,
not cost, but the amount of time you have, I should say, to do, and that's a good time to get into maybe like index funds or something, a steady investment that you can contribute to that has, and this is kind of a my spin on investing for young people today, which some people may disagree with. That's okay. I like to have at a young age, I like to have investments that have liquidity because when you're young, you don't have a lot of cash, much less cash to invest, right? And there may come a time when you need to pull that money out to pay for something,
mm,
right? And if you have, like, say, um, an IRA that has vested, and there's usually like a 3 to 5 year vesting requirement, depending on what company you go with. You can take out your contributions to that IRA at
mhm,
no penalty as long as you don't touch the earnings on what was in. You leave the earnings, you can take what you've contributed. It works similar actually to um, some types of insurance, except you don't have to pay it back, right?
okay.
It's your money. Yeah, but it will count as income, I believe. I could be wrong about that, but I'm pretty sure it count if you keep it and hold it, it'll count as income on your taxes. But you won't take a 10% IRS tax penalty. But anyway, that's a rabbit hole. I can,
No,
I go on, but that's that.
that would be a cool rabbit hole because for our investors, we're typically looking for a minimum of 10 uh, to pull together to buy apartment buildings. And
Mhm.
some people are like, where do I get 10 grand? I'm like, well, there are a lot of places to have 10 grand. Do you have an IRA? And they're like, oh yeah, they don't really think about it. And I look, I'm like, oh, there's like 200 grand in my IRA. I'm like, oh, okay. You can use some of that. I mean, I'm not a tax professional, but I do have investors who do that. Um, but no, that's really interesting because I have the TSP and I've got like a mutual fund, but I don't have an IRA. So I'm thinking like I'm not really sure how you withdraw money from the IRA. So you can take the money out. You can't take the gains out, but you could take the money that you put in out, and you get taxed on that. You think maybe you're not a CPA, but maybe.
Yeah, I don't remember specifically whether you get taxed on that, but I'm pretty sure you do. But
Mhm.
you don't incur an early withdrawal penalty, which is the extra 10% that you would normally incur if you say pulled that money out of a 401k or a TSP or something like that. You would normally get charged a penalty.
Okay,
But with this, you don't, as long as you don't touch the gains.
got it.
Yeah, so
So,
that's something I'm looking at. Another thing is if you just don't want to worry about all that stuff,
mm,
just get a straight up taxable account mutual fund,
mm,
right? And the only thing you're going to get charged is the predetermined amount when you withdraw the amount from the mutual fund, right? Which is, it's actually a sale because a mutual fund is a bundle of stocks,
right.
essentially,
Mm,
right? So you're basically selling your stocks, and then the broker that you're, having sell them gets a small cut, which the one that I use, they only get like a 1 or 2% cut. But which is, I don't know, I think it's pretty good. But the you got to be careful how you set up your mutual fund because you can pay a one-time fee in most places, or they can take a flat cut of the profits every single year. So if you're not worried about taking a little bit of a chunk out of your initial investment, in order to make a much more long-term gains,
mhm.
so that you don't have to pay that, let's say it's 2% a year, then that's fine. If you're only planning on having this account for like 4 or 5 years, maybe you just want to let them take the 1 to 2%. So that's a decision that you'd have to make with, talk to the fund manager, and see, usually they'll set you up pretty well. They'll listen to what your needs are, and they'll get an idea of what your risk criteria is,
Okay.
uh, what you're comfortable with, things like that. But anyway, that's kind of the rabbit hole of liquidity and investments for young people so that you can either pay for unexpected expenses if they're really big expenses. Ideally, you don't want to touch your investment accounts, but sometimes you do. You have to, right? Things
Mhm.
come up. Or you can use that as kind of a de facto holding for, future investments. Like I had a situation a couple years ago where I was like, man, I really need to cut my expenses right now because I had an additional monthly expense that came up. I had to put a roof on my house, and so I got into my mutual fund and I pulled out $14,000 and I paid my vehicle off.
Mhm.
Got rid of my, whatever the monthly payment was, and then I had plenty of cash to each month to pay the payment on the roof until I paid that off. So,
Cool.
yep.
Okay. We'll start wrapping up here. How can I or my viewers provide value to you?
I would say the best way to do that is to just interact with my content. I provide educational services on Facebook, YouTube, Instagram. Really, I'm not looking for necessarily shares or likes, but more like conversation. I think
Okay.
that's the most valuable thing in financial education is for people to have conversations around what's going on. Some of the things that I'm telling my clients to do or think about are a little bit new ways of thinking compared to traditional financial planning because most advisors or planners work with long-term clients who are looking at retirement planning. I am working with people who are trying to get on the feet and be responsible, and they want to be able to have kind of innovative ways to use the capital that they have. They don't want to tie up their money in investment accounts for 30 years, things like that. So that's one of the reasons I'm getting into real estate now. I mean, I was in it before, just kind of flipping single family homes that I was in. But now I'm really seriously looking at duplexes, triplexes, maybe multifamily in the near future, to create cash flow. So
Okay. Yeah, I mean, you know who to talk to.
yeah,
Uh, Last question. What is your superpower?
my superpower. Oh man, my wife would say it's the irritator.
Oh my
Um,
God.
yeah,
I'm sorry.
uh, yeah. I don't know. I'm pretty intuitive. I'm pretty intuitive dude. I can read people pretty well, and yeah, I can. I empathize with people's situations. I think is probably the best thing when it comes to um, how I do business, right?
Mhm.
Because I've been in those positions before, um, where you got to get your next meal from a change drawer, or whatever the case may be, and I know what that feels like, and I empathize with it, and I'm not here to make anybody feel bad. I'm just going to tell you the way it is. I'm going to be honest with you. So
Mm. So I think that's something I've got a knack for too. That's what I'm told. Like, wow, you're so intuitive. Like, I don't know, man. Just ask questions and listen. I
yeah, yeah,
guess it's not common.
yeah. I think a lot of people they listen so they can reply instead of consider. So
Mhm. Yeah.
they just wait to reply.
Cool. All right, Albert. Thanks for talking with us. I'll put some of your contact info down in the description, and yeah, I'll talk to you soon.
Cool. Sounds good. Thanks.